Could there be a work from home trend reversal happening in Nashville? Starting January 2nd, Amazon is requiring their employees come back to the office 5 days a week. This actually anecdotally changed the traffic in Nashville. You tell me if you've noticed a difference in traffic. Amazon's hiring like crazy. Asurion in Q4 had a layoff. They targeted remote workers and told people they needed to be back in the office at least 3 days a week. These are some of the largest employers in Nashville requiring their people to come back into the office. And of course, Jamie Dimon had some thoughts about this.
A lot of you were on the Zoom and you were doing the following, looking at your mail, sending texts to each other about what an asshole the other person is, okay? Not paying attention, not reading your stuff, and if you don't think that slows down efficiency, creativity, creates rudeness and stuff, it does.
So the question is there data to suggest that return to office is impacting the housing market? Now, when we look at contract volume, you can see here's greater Nashville area. Davidson is where downtown Nashville is. That's where the core of Nashville is, Davidson County. We can see demand is actually lower in Williamson County and in Rutherford County, but it's actually up in Wilson and Sumner and Murray, which is kind of interesting. But Davidson, it's up. When we look at contract volume by county, we can see Rutherford down 17%. That's massive. Williamson down 11%. That's massive. And Davidson is up. Now, at the same time, when we look at active listings, we can see Rutherford is off the charts with active listings off the charts here. Unbelievable, 41% up in Rutherford. Williamson's up in 8%. Look at this unseasonal build right here where we're actually kind of building or staying stable with our active listings. This is much different than last year and the year before where we had this seasonal drop until we got to March. That's interesting. Davidson, meanwhile, is kind of dropping. It's doing a counter trend to what it did last year. So the question is this suggestive of a return to office trend? Let's look at Wilson County really quick here. We've got two cities in Wilson County. I don't know if you can see them here. It's too dark, but we have Lebanon, which is east of Nashville. It's further out. It's about 45 minutes away from downtown Nashville. And then we have Mount Juliet, which is, I don't know, like maybe 20, 25. You guys tell me in rush hour how long it takes. I don't know. Anyways, okay, so Mount Juliet's much closer to downtown Nashville. If we're seeing a return to office, I would think that contract volume would be spiking in Mount Juliet more so than Lebanon. Let's just see if that's what's going on. So when I look at Lebanon, we can see that existing contracts, 57 in 2024, now there's 67. That's a pretty decent increase. New builds, 53 in 2024, now there's 71. That's a very large increase. Across the board, Lebanon is increasing in contract volume. Is that happening in Mount Juliet? No. Okay, remember, Mount Juliet's much closer. Mount Juliet is much closer to Davidson County. So I would expect that if this is a return to office trend, that what we would see is increase in contract volume for existing. We see a drop, 51 in 2024, now 43. Contract volume, even when you combine all these areas, it seems very flat compared to last year. When we look at active listings, it's not active listings. Mount Juliet existing inventory was 69 at this time last year. Now it's 134. It's doubled. It's doubled. So Mount Juliet has doubled in inventory, but contract volume is flat. In Lebanon, is that dynamics the same? We're seeing strong growth, but not nearly as strong as in Mount Juliet, 142 to 183. And here, new builds, 124 to 182. That's a 50% increase. So the contract volume appears to be coming from further out. Now you tell me if that's what you're seeing. Let's take a look at Williamson. Is that happening in Williamson? We can see contract volume for Thompson Station. Let's go back to the map here. Thompson Station is the furthest south along 65. When we look at contract volume between Spring Hill Thompson Station on the Williamson side, contract volume's actually dropped. Let's look at active listings. Maybe there's some active listing dropping. 40, what is that? 51 last year in existing. Now we have 107, more than double. Now, new builds have actually been drying up. If you notice, the new builds are starting to dry up, and maybe That's also interesting. Maybe they're pushing on the brakes. You guys, again, tell me if that's what you're seeing. It feels like to me, people are moving further out to get to lower prices. If that's the case, this might be a rejection of price. Now, when we look at existing price cuts, they are soaring right now, skyrocketing. Look at this. Just a week ago, it's February 15th. Just a week ago, they were at 1638. They're now at 1709. Keep in mind, last year, it was kind of trickling up, but it was much, much more stable. This is a massive, massive increase in price cuts. And look at how much higher it is than it was in 23 and 24. Now, price cuts going vertical like this, let's go hunting. Let's go find those buyer's markets. And here's how we find the buyer's markets. Are you ready for this? This is cool. The neighborhood tracker. This is what you need to go find those buyer's markets. If you're buying right now, you want to buy in the green. I tell everybody, I'm like, look, buy in the green, sell in the red. Now let's take a look at some real buyer's markets, like maybe where people are really dropping their price. Let's go over here by Radnor. Look at this. We've got a green, dark green line around the green polygon. We notice that the year-over-year change here is 3%. And look at this gross yield, 2.4%. That's the median lease price per square foot over the median price. Tells me that prices are pretty disconnected from reality here. And of course, that's probably why there's an 8.5-month supply. And according to active over contract, there's a 7-month supply. There's only one under contract with 7 active listings. Only 10 sold this year. There's almost a year's supply of inventory. Let's just take a look at this one real quick. We can see a disconnect. Look at this. Prices peaked at over 400 a foot, and they've been kind of dropping in this area ever since. You can see just how few transactions. Look at that. Still, the fact that they're getting a new high, that's pretty interesting. Let's look at sales price. This is classic. All the active, completely disconnected from reality. I'm just telling you, disconnect from reality. The only one under contract, right on the low end of price per foot. And let's just look at sales price. Let's compare it by price per foot. Again, all the active listings, they're trying to push prices up. And the one that's under contract, price per foot is reasonable. $825, reasonable. It's the only one selling. I mean, who knows? Maybe they can sell, but I have a sneaky suspicion that they're all going to sit there for 6 months and then realize that they made a mistake trying to sell. But who knows? I mean, I could be wrong. It could flip. Look, I can't tell you where prices are going to go. I can't tell you when the dynamic's going to shift. What I can tell you, though, is how it feels right now relative to how it felt last year and the year before and what the pricing dynamic is. Look at this. Okay, now what this is a supply and demand chart of this neighborhood over time. You can see that last October, there were 38 active listings, which shoots out of the water what was going on in 22, okay? You can also see peak price cuts. Peak price cuts is almost more important than active listings. When someone cuts their price, they don't know what their home is worth. When they cut their price, they're saying, hey, we missed it. We missed it, and now we don't know what it's worth. If they keep cutting their price, they have no idea what it's worth unless it's open door, and then they're just algorithmically cutting it every week. Let's look in Mount Juliet here because this is where it seems to be pretty weird. Look at Jackson Hills over here. Let's see what we've got. 13. Now we've got 12. So it does look like contracts have picked up a little bit, but we have 12 active listings. I wouldn't say that this is a major buyer's market. It's actually probably better to buy last year when there were 5 price cuts in December. This neighborhood has traditionally been very, very tight up until the last year. Let's make sure that this isn't new builds. So I go over here and I just look at my built info and we can see that no, it's not new builds. But what this does suggest to me is that we could be seeing the beginning of some softening. Now we can see that prices have been pretty strong. They dropped in 23 into 24, but in 24 they were very strong. Let's go down here though. Let's look at some of these Del Webb communities here. Let's look at Lake Providence down here. Okay, so we see a skyrocketing in active listings again. So this is the Mount Juliet trend I think we're seeing. And look at the contract volume. I mean, we can see 3 under contract. We go back to last February and there was 5 under contract, but there was no active listings. Again, got to ask yourself, is it because of new builds? We look, these are not new build neighborhoods. These are people that could be cashing out. It's pretty wild to see that. No, I mean, there were all-time highs in this neighborhood just 6 months, 8 months ago, 12 months ago. All-time highs in this neighborhood. It's been a very strong neighborhood, but now you can see 11 active listings in this area. In August would have been a good time to buy here because of the price cuts, but I believe we're on the verge of a real softening in Mount Juliet just based on what I'm seeing. You can change it anytime. But last year in the spring would have been a great time to list. There's a lot of demand out there for this neighborhood, but it does appear that sellers are coming out more than they have in years, Very interesting to watch those dynamics play out. So in the end, buying the green, selling the red, you'll always do better than average. There'll be times where more neighbors are selling and fewer neighbors are selling. At least understand the dynamics of the neighborhood so you don't become reactive. That being said, there's definitely a shift with existing, and it does feel like sellers in resale markets are doing something very different than they did last year, and it could create some pretty interesting times. With that, I hope you all have a great rest of the day, and I look forward to seeing you next Saturday. Thanks a lot.